Hello, and welcome to this informative video on debt management. If you're struggling with debt, you're not alone. According to recent statistics, the average American household has over $137,000 in debt, with credit card debt and student loans being among the most common types of debt. In this video, we'll discuss various types of debt and provide tips on managing them effectively, including tips for paying off credit card debt and student loans. So, let's get started. Types of debt. One effective way to manage your student loan debt is to base your monthly payment on your income. Income-driven repayment plans can help make it easier to manage your debt by adjusting your payment amount based on your income level. This can be particularly helpful for those with lower income levels or experiencing financial hardship. In addition to income-driven repayment plans, making extra payments on your student loans can help you pay off your debt faster and reduce the interest you pay over time. However, checking with your lender to ensure no prepayment penalties before making extra payments is essential. Another option to consider is refinancing your student loans. Refinancing can help you secure a lower interest rate, saving you money over the life of your loan. However, it's essential to research and compare rates from multiple lenders before choosing a lender to refinance with. Lastly, if you work in specific fields, such as public service, you may be eligible for student loan forgiveness after a particular time. Check with your employer or the Department of Education if you qualify. Managing debt can be challenging, but there are several strategies you can use to pay off your student loan debt. By basing your monthly payment on your income, making extra payments, refinancing your loans, and applying for student loan forgiveness, you can take control of your debt and work towards a debt-free future. Managing debt. Managing debt effectively is crucial to achieving financial stability and avoiding financial stress. To start managing your debt, the first step is to create a budget. A budget will help you understand your monthly income and expenses, allowing you to identify areas where you can cut back and free up more money to pay off your debts. Once you have a budget, you can start prioritizing your debt payments. It's essential to pay off high-interest debt first, as this type of debt can quickly spiral out of control and lead to more financial problems. Credit card debt is a typical high-interest debt, so it should be a top priority for debt repayment. Two popular methods for paying off debt are the debt snowball method and the debt avalanche method. The debt snowball method involves paying off your smallest debt first, while the debt avalanche method prioritizes paying off the debt with the highest interest rate first. Choose the best method based on your financial situation and personal preferences. Debt consolidation is another option for managing debt. This involves taking out a new loan to pay off multiple debts, often with a lower interest rate. However, it's essential to be cautious and ensure the new loan has a lower interest rate than your current debts. Additionally, read the terms and conditions of the new loan carefully to avoid any hidden fees or penalties. In summary, managing debt requires creating a budget, prioritizing high-interest debt, and choosing a debt repayment strategy that works best for your financial situation. Consider debt consolidation an option, but be cautious and research before committing to a new loan. Paying off credit card debt. Credit card debt is one of the most common types of debt many struggle to manage due to high interest rates. If you're one of them, you might feel overwhelmed and wonder how to pay off your credit card debt. Fortunately, a few tips can help you get on the right track. First, stopping using your credit cards while trying to pay off your debt is crucial. It's tempting to continue using them for everyday expenses, but doing so will only add to your debt and make it harder to pay off. So instead, switch to cash or a debit card for your daily expenses. Second, paying more than the minimum amount due is vital in progressing toward paying off your debt. When you only pay the minimum amount, most of your payment goes towards interest, and you'll hardly make any headway in reducing your debt. Therefore, if you can afford to pay more than the minimum, do so. Third, consider transferring your balances to a card with a lower interest rate. Doing this will save a lot of money on interest charges and make it easier to pay off your debt. However, read the fine print and understand any fees associated with the balance transfer before proceeding. Lastly, you can use either the debt snowball or debt avalanche method to help you pay off your credit card debt. Both ways can be effective, so choose the best option for your financial situation. Paying off credit card debt takes time and dedication. The key is to stop using your credit cards, pay more than the minimum, consider a balance transfer, and choose a debt repayment strategy that works for you. Then, with persistence and effort, you can pay off your credit card debt and achieve financial freedom. Paying off student loans. Student loan debt is common among graduates and can become overwhelming if not managed properly. However, several strategies can help you pay off your student loans and become debt-free. One option is to consider income-driven repayment plans if you have federal student loans. These plans consider your income and offer a more affordable monthly payment, making it easier for you to manage your debt. However, it's important to note that these plans may extend the loan term, meaning you could pay more interest over time. Making extra payments towards your student loans is another strategy to help you pay off your debt faster. By paying more than the minimum monthly payment, you can reduce the interest you'll pay over time and potentially shorten the loan term. If you have good credit, refinancing your student loans can be smart. This involves taking out a new loan with a lower interest rate and using it to repay your existing student loans. It can save you money on interest and help you pay off your loans faster. Research multiple lenders and compare rates before deciding on a lender. Lastly, you may be eligible for student loan forgiveness if you work in specific fields, such as public service. This program forgives a portion of your loans after a certain period of time, usually 10 years. Again, checking with your employer or the Department of Education is essential to see if you qualify for this program. Managing student loan debt can be challenging, but by considering income-driven repayment plans, making extra payments, refinancing your loans, or applying for student loan forgiveness, you can take steps toward becoming debt-free. In conclusion, managing debt can be challenging, but it's important to prioritize paying off high-interest debt and creating a budget to help manage your finances. Whether it's credit card debt or student loans, there are several strategies you can use to pay off your debt, including the debt snowball or debt avalanche method, debt consolidation, and refinancing. By taking control of your debt, you can improve your financial situation and work towards a debt-free future. Thank you for watching.